Hello, everyone, and welcome to CMP TV. I'm Fergal McAlinden, the Canada News Editor for Mortgage Broker News. And today I'm joined by some of the biggest names in the Canadian mortgage industry to discuss the most pressing issues that are currently in the news. I'm very happy to welcome today's guests, Peter Aceto, the President of Mortgage Alliance, John Barges, the Founder and CEO of CIMBC, and Boris Bozic, the Founder and CEO of Merix Financial. So first of all, one of the main issues in the industry over the past few weeks has been the OSFI announcement that it intends to raise the stress test rate for uninsured mortgages at the start of June. What's your view on that and the likely impact that it'll have in the market?
And I'd say one of the most popular discussion items over the last few weeks. So I have spoken to hundreds of Mortgage Alliance brokers about this topic and the discussions they're having with their clients. Look, I think, I think we all know what OSFI's primary role is, right? Is to make sure that the financial system is safe and sound and that our lenders are safe and sound. And I think that the mortgage stress test was put in place to create a buffer, in case rates go up. And I think, further deepening and increasing this buffer is many perceived as unnecessary, to be very honest with you. And I think really contemplates like a real doomsday scenario, in the end of the day. When I have talked to a lot of brokers about it, and I think, there is a view that it may push out a few people who are barely able to qualify. But it could also lead to mortgage brokers and borrowers really just adjusting and pivoting and being innovative, finding co-borrowers, finding a way somehow to get a larger down payment. Hopefully, it doesn't lead to documentation fraud issues or anything along those lines. We certainly don't want that. I don't think it's going to have a very big impact in terms of dampening the markets as a whole. But I also don't really think that was the point of it. It is just to make sure that borrowers and lenders have the ability to buffer, significant increases in rates. So hot topic. I'm not sure it's going to have a huge impact.
And Boris, is that something that you would agree with, or do you think that the issue is being slightly overplayed?
First of all, you take a look at the regulators and the government, what they were trying to do. They're responding to the frothiness of the marketplace. And there was some of the motivating factor, I think, was to appear that they're addressing the issues that are in all the papers, online, everywhere, because that's what everybody is talking about. We right away did our analysis internally in terms of with this new stress test, what would be the impact to our overall business. Firstly, I will say that our percentage of the uninsured business is less than some of our direct competitors and how much they do in that space. So to say that there's going to be a significant impact or the potential impact to our business, I'd say no. There was a percentage of, I'm not going to get into specifics or details what that would be. But I will say where the opportunities beyond what Peter mentioned is that look, people need money and they're going to find solutions. And I don't think they're going to stop waiting for shelter. And so what you might start seeing is a movement towards some of the lenders who have investors that are non-regulated. So for example, at Merix, and I'm not turning this into a Merix commercial by any ways, but we do have a near prime solution called NPX. And we have investors who will qualify on the contract rate and not on a stress test. So these people will still be able to go out and buy a home and they'll have even greater purchasing power. So I think the overall impact, I don't think it's going to be as profound as I've heard some individuals in the industry actually have said that, because it's not as if the government hasn't tried things in the past and the market has continued to evolve and also grow. So that's my viewpoint on the pending changes coming forth on June 1.
John, Boris mentioned that is due to take effect on the 1st of June. Do you think that there's a risk that the market might heat up before that as people rush in to try to get in before that date?
How much more of a risk is there than what we've already experienced in the market? I mean, it's been on fire for the last 12 months. I mean, think about 2020. I think most lenders would agree that going into the unknown of the pandemic, they were probably thinking more retracement than, progress and growth. Here we are, after a number of months, I'd say 10 months after, what they thought was going to be a retrenchment. We had a record year. And I think I pretty much speak for the entire industry when I say that. And 2021 shaping up to be very much like the experience we had in 2020. I mean, look, you've got historical low interest rates, and that's really the key driver. You've always had the benchmark in place to essentially, ensure that the financial system in Canada remains stable. So nothing's really changed aside from the fact that really people or borrowers, whether for purchase, refinance, or whatever it is that they were looking to borrow money for, are out there because of the historical low rates, buying and refinancing. And I don't think that's going to slow down. And my esteemed colleagues, essentially, made mention of this. I don't think the impact's going to be very, very, very different at all. When the change happens on the 1st of June. In fact, Boris made a comment about, the uninsurable and insured. And, I think Merrick's has experienced, I think you've got a larger proportion of insured, Boris, than the uninsured.
Correct.
Yeah. And I think that, when you see the growth of the suburban areas in the country, in many different regions, because that's really where a lot of the heat is happening now, right? Because, I mean, look, Toronto's still hot, as is the GVA. Montreal's heated up over the last 12 months, but you've seen the suburban areas really pick up a lot, and of course, the explanation for that is that, working from home concept has contributed largely to that. And, the infrastructure that's taking place around the major metropolitan areas. So is it going to slow down with a 0.5 point increase in the benchmark rate? Not really. As I said, I was quoted in an article that was published last week in Mortgage Broker News. The problem, and I'm not even sure it's a problem, but there's certainly a lot of discussion and rhetoric around a bubble that continues to build. And there's arguments, I think, for both sides. And I could see the reason for concerns. But, that problem's been ongoing for many years. And it's largely based on the lack of supply that, I don't care what level of government you're referring to, they haven't really, implemented the appropriate strategies to address the problem. When you've got the demand curve that's far steeper than the supply curve, that's a big problem. Okay, and that's really what we're seeing here.
Thanks, John. So will the bubble ever burst?
John talked about this real estate bubble in Canada. And that we've been actually, it's been in the newspaper every day for 5 years, maybe longer. To his point about supply and demand, and certainly I'd say the driving issue is supply. But when you think about demand on an ongoing basis, I mean, Toronto, for example, Vancouver, our country is a very, very, like, the world wants to be here. And I think that, we should not necessarily be comparing our cities to the way they were 10 years ago, but compare them to Manhattan and pre-COVID Manhattan and Sydney, Australia, and Singapore. And so when you think about it in that context, I think it changes maybe our mindset a little bit.
Thanks, Peter. And Boris, do you think that that's likely the case for the future, that the supply issue is going to be a major problem?
In terms of the real estate market in general, sometimes we can view it through isolation, but if you look at what's happening globally, the United States, the UK, France, Germany, Australia, New Zealand, real estate has gone through the roof all at the same time. And so this isn't a Canadian exclusive issue today in terms of what's happening in the housing market. And back to the supply issue, what people don't have a tendency to really focus or really mention to any great extent is if you look at our immigration policies, for the last 10 years, we set a target of 350,000 new immigrants to Canada every year. Obviously, that was impacted in 2020. The government now has reset those targets. The targets for the next 3 years are 415,000. Of the 415,000, 23,000 will enter into Canada under refugee status. The remainder of new immigrants have to, they're granted entry based on a point system. And how do you earn points? Your education, your occupation, and most importantly, how much money are you bringing with you to Canada? You know what? These people, the 390,000 people, they need a place to live. They need shelter. And so to me, the supply issue is just going to be exacerbated by the fact that you have this influx of new people. And by the way, we need the new immigrants to come into our country to ensure economic growth, because Canadians aren't having enough children on their own. And that's why we're doing it. But we're saying that these people coming to our country, you've got to have the means to be able to take care of yourself. And a part of our staple and our fiber and the reason to come to Canada is to have home ownership. Well, guess where these people are going to end up, right? Your primary cities of Toronto, Vancouver, Montreal, and we have immigration policies to encourage people to go to the Prairie Province in the Atlantic Province, and it does happen. But this is a real underpinning. So we have the psyche of Canadians still prioritizing home ownership, and we have 400,000 new Canadians just coming to our country needing a place to live. So I think the supply side of the issue will continue for the foreseeable future.
So what Boris is actually saying is that no one is on the first train headed to North Bay. Have I got you right, Boris?
Well, of course. I mean, it's normally when you're a new immigrant to a country, you want to go somewhere for work-related reasons, be closer to your own community if you're coming from these other countries, et cetera, et cetera. And so, yes, your first choice is to be in the urban centers or as close to the urban centers as you can possibly make it work out for you and your family.
So we also had a Bank of Canada announcement over the past few weeks, which seemed to indicate that interest rates could be going up sooner than originally thought. Is that something that you think is going to be a big issue going forward?
Are the rates going to rise? You've already seen an increase in the bond yields from the historical lows. The Bank of Canada and certainly, the U.S., the Federal Reserve are very cautious. Certainly that's their language, very cautious to insinuate or intimate that there's any kind of significant rise in the interest rates, certainly in the foreseeable future. Then you get, experts on the BNNs of the world that'll come out and say things, would probably give us, the impression that the rates will probably rise in the back half of 2022 versus the anticipated 2023. Look, nobody's got the crystal ball. When you start at ground zero, when it comes to growth, then naturally you're going to see an upward trend. It's natural. But my opinion is that the economies on a global spectrum are very fragile. And let's not even get into the record sovereign debt levels that one day have to be addressed for sure. I see us personally in the Japan of 20, 25 years ago. That's kind of the cycle that I see us in right now. How long that's going to last, whether you see an upswing of, 100 basis points or, only to see it drop again by another 50 or so. If you look back at the last crisis we had in 2008, 2009, you saw us go from, what was considered record low interest rates back then to maybe an upswing of about 150 to 200 basis points, which again, historically speaking, is very low. So you're talking benchmark numbers of today. That's what you're talking. So, but I don't think there's any real threat. because of the fragility of the market. And I think, I wanted to make another point on some of the other suggested changes that OSFI may be thinking about. I think that any real significant adjustment or disruption, I'm going to call it, in the way that our financing is structured today will, in my opinion, almost certainly lead to unintended consequences. The reduction of amortizations, for example. I get the theory behind it all, but theory doesn't necessarily always play out in practice. So I'd be careful if I were a regulator in terms of what it is that you were thinking of proposing, because I think it's already been mentioned by both Peter and Boris that, when there's a will, there's a way. And I've been doing this for 30 years, and there's always been a way when there's the will.
And Peter, what's your thoughts on the future of interest rates?
Yeah, I mean, I definitely have thoughts. It was funny when John was talking before he said it. I was thinking back to 2008, 2009, and I was thinking about the interest rates then. And I remember the prognostication in 2009 that interest rates would be higher in 18 months. And by and large, if you look at that period of time since 2008, 2009, not unlike your analogy about Japan, we have been at very, very low historic rates the entire time. So to be very honest with you, I don't see any I don't see any forces that are reasonable for me to believe that rates are going to increase in a way that's going to impact lenders or impact the performance of portfolios of loans or consumers, to be very honest with you. And I think with the debt levels that our governments have and our households have, there's a lot of risk of the impact. And in many ways, that's what the stress test is about. So I think there's a lot of forces that are going to keep interest rates low for quite a foreseeable future. We cannot predict the future. And if we do, we're definitely going to be wrong. But that's certainly my view. It's actually been my view for a very long time.
And finally, Boris, what's in store for interest rates in the future?
If the interest rates were to increase abruptly or very, very quickly, to suggest that there is no risk would be naive, because we have people that we have provided financing for that are at the higher end of the margins, right? So without their economic standing improving and increased payments, there will be a percentage of those that are impacted. To what degree, time will tell, because you still have the option even today. Let's face it, if you found your payments to be very, very stressful, you could have your house sold in less than 24 hours, right? There are remedies to those people that maybe they bit off more than they can chew, right? There are solutions for them. Here's what I'll say about prime and the rates going up. I think we all have to remember too that the prime rate today is being artificially suppressed to provide more liquidity in the marketplace. They're only at these rates today because of the underlying economic data, right? We are still in a rather fragile economy. We have a sector of the economy, the real estate sector, who has performed magnificently during the global pandemic. You have other sectors that are suffering. And so to me, as prime rate goes up, I don't view it as a negative. I view it as it's a sign that the underlying economic data is getting better on a much broader basis for the overall economy. An overall healthy economy is good for our business in the long run.
John, you mentioned those demand issues and the fact that some of the measures introduced by the government have been missing the mark. Are there any specific measures that you would like to see put in place?
So I could speak to you specifically about, the GTA market, because I'm quite familiar with it. I'm sure that other metropolises are experiencing the same challenges. Red tape, like the red tape one has to go through to actually, bring a structure to fruition or a community to fruition is it's insurmountable. And as an example, if you start a project today, you probably wouldn't see it to fruition for 3 to 5 years out, for various different reasons. And I'm not going to get into construction because I'm quite familiar with it. I've been involved in it, and I've been involved in it on a small scale and a large scale. So I understand, the dynamics behind it all. The red tape has to be minimized on the municipal level, starting with the municipal governments. Then you've got to deal with availability of land. You have to find a way to open up the different options to make land available for more construction. So red tape, availability of land, and infrastructure being the last one. That's very important. We all know in Ontario specifically, and I can address Ontario specifically because I'm more familiar with it. I don't know how many promises have been made by governments to build infrastructure out. And not only does it take a whole lot longer than it should, and I mean a whole lot longer than it should, but they way overshoot the budgets, which causes a whole lot of problems, from a financial perspective, and delays. So if I were to, if I were asked to deal with the issue, those are the main issues that I would address.
And Peter, is there anything that you'd like to weigh in on there? Any specific measures that you think need to take place?
Well, I think maybe just to pick up one or two of the points that John made, I think the supply side is something that needs to be addressed. You've heard the analogy, the best time to plant a tree is 10 years ago. And if you couldn't have done it 10 years ago, you got to do it today. And I think the two of the points I would highlight are, it is slow and bureaucratic. Only a small group of people know how to navigate their way through it. And then the availability of land, so that we can build more affordable housing. We can work on the supply side, so all these immigrants have a place that they can live and be productive in an affordable way. So yes, I would like to see those two things, but then also some stimulus that would incent people to build that type of housing.
So one ongoing problem with the pandemic is that brokers aren't able to meet face-to-face with their clients, and that's something that we don't foresee changing soon. What impact do you think that's having, or what would be your advice to brokers in that climate?
That's an interesting question. What's our world going to look like on a go-forward basis in the whole sales cycle, if you will, in the process? I understand broker who miss that connectivity, but the irony is that there is enough data today that would suggest you're probably connecting more with your customer today than you did in a traditional business relationship. And I'll give you an example. It's not uncommon for me to be on a Zoom call, even with my senior leadership team, and there's an 8-year-old that comes in and starts jumping up and down on the bed because they think it's a trampoline as the call is going on. A year ago, you would never have tolerated that behavior. On every Zoom call that I'm on, and I think you can pick it up on the camera, they say, "Is that a Peloton bike, Boris?" And my stock answer, yes, that's where I hang up my jacket. I put it down and then I get to work. We live in a voyeuristic society. People always want to get a behind the scenes look. We are into everybody's home today. Everybody. We're all calling from our homes. I don't know how you can connect more personally than that. And you talk about children, and you're talking about things that you never talked about in the traditional business relationship and the way that we have conducted. I understand the mental strain that this is causing on everyone. You want to get out. We all want to socialize. But I really do believe what we're doing today will be a part of our process going tomorrow, even if the pandemic was all wiped out. Right? I think the way it used to be, 100% of it is no more. And that's simply because we've been doing it for a year. And we really have learned to adapt. And based on John's comments and Peter's comments, it hasn't impacted anybody's ability to do their job. But I would suggest to you that in a lot of cases, you're probably doing your job even better because of the amount of interactions that I can have on a per day basis. And the relationships, you're seeing into customers and suppliers that you never saw before just because of this environment that we're in.
And John, in terms of clients' interactions with mortgage brokers, is that something that you think has been changed forever by the pandemic?
So in answer to your question, I agree with my friend there, Boris, that I actually think life's improved. And I think it's improved tremendously. I kind of gave you a little bit of a tidbit when I was talking about the efficiencies and how we work with lenders. I love having, discussions and productive discussions and meetings in a very short form, getting from point A to point Z in a straight line, not a zigzag. That's just the way I like to do business. This has kind of helped me do this. And I'm not a transactional broker anymore, but I can tell you that if I were to compare it to the many different interactions I have with partners today, I think it's brought a huge efficiency twist to the way we do business. Because I do remember when I used to do business on a transactional basis, it was a phone call. So I'm not sure how personable you can get on a phone call, or it was email. And I think we've all come across, misinterpreting the real message of an email because it's not personable. It's more right to the point, and you don't feel the emotion that comes through on a written email unless it's a love note, right? And this way, when you see the face-to-face, you see me talking with my hands. You don't see that in an email. You don't see that in a phone call. So I think it's fantastic. I didn't know what Zoom was until, March of 2020. And I think if brokers embrace the virtual meeting, which really never, I think if 10% of brokers said to you that they do a face-to-face with clients going back 10, 20 years, it's probably a high number, because we can't possibly do the number of transactions that we do having a face-to-face with every single client, right? So I think it's fantastic. The technology has been great, and the more they use it, the better off they'll be.
And Peter, in terms of any advantages that have been brought about by that switch to digital, what are some of those in your eyes?
Absolutely. I think, Fergal, I think it's a great discussion topic. And listen, I don't want to repeat what Boris said. I don't want to repeat what John said. I just completely agree with them. Employees, brokers, you get to see things about their life that are just basically hidden from you if you didn't have the opportunity, and it creates a different discussion and a real connection. So I'm not going to repeat, but I'm going to answer your question and add a thing or two, which is really important to me on the topic. So listen, brokers, I've been in the lender world for most of my career, and we were lenders to brokers in my ING Direct days. I'm now 6 months in, with more in the depths of the pool with my broker friends, and really getting to know them very well. And of course, there's some that are incredibly tech savvy and like ahead of the game, and there are there's people on the other end of the continuum, and brokers all in between. But all mortgage brokers were forced to use video conferencing. They had no choice. It was either do that or they weren't going to do any deals when, the ability to meet was taken away at the beginning of the pandemic. So it forced people to take that leap and to learn how to use it, figure that they can learn it. So people have been forced to survive, to learn a new skill that I think is really, really helpful. They won't need to use it forever if they don't want to, but I think many of them will have seen the benefit. But two things I'd really like to impart, and I had the privilege to speak at the MPC symposium last week, and I talked about authenticity and connection. And I said that that the more digital the world becomes, the more that connection and authenticity is a competitive advantage. And I think mortgage brokers are built to connect. They're built to be authentic. They're built to help. They're built to show people the path through a complicated, challenging transaction. And I think the more digital the world is, I think the more authenticity really, really matters. And I think authenticity allows a business or an individual to be perceived as more real and more warm and more caring and more connectable. So I see a great opportunity when there's more digitization, and I'm the digitization guy. The more digitization, the more authenticity and connection matters. And as Boris rightly put out, Zoom is a technical tool that allows you to see behind the curtain of people. And if you seize the moment and make the connections by the things you're seeing in front of you, I think it's a huge opportunity.
All right, well, that's all that we have time for. Thanks again to all of our panel for taking part. Thanks for viewing, and we'll see you next time on CMP TV.